What's happening this week in markets?
Well, last week Wes gave us an update on fertiliser prices, so I thought it might be good to look at another input cost that should be top of mind for Australian agribusiness. Crude oil prices have been quietly staging a remarkable rally since April last year. Viewers who keep a close eye on the financial markets might remember that at the start of the pandemic back in April, crude oil prices actually fell by so much that oil traders started paying buyers to take their product. Basically, as global airlines were grounded overnight and consumers working from home were no longer filling up the petrol tank quite so often, the world experienced a huge crude oil supply glut. The oversupply was so bad that not enough infrastructure existed to store it all, and that's why traders were briefly paying people to take the oil. If we fast forward to today, the move has reversed, and crude oil prices are at their highest level since the middle of 2019. As national lockdowns have been relaxed and workers return to the office, there has been an increase in demand for transport fuels. At the same time, production capacity that was dramatically scaled back last year has failed to keep up with the renewed demand, hence the increasing price level. There are some theories in the market that energy companies have underinvested in new supply exploration, and that implies that the increase in prices may have further to go yet. Stronger prices for crude oil, along with iron ore and copper, has helped the Australian dollar to recover some ground over the last week. The Aussie had traded as low as 76.26, but has rebounded to be more than $0.01 stronger. The strength of the currency is reflective of the relative strength of the Australian economy. The Organisation for Economic Cooperation and Development upgraded their forecast for 2021 Australian economic growth to 4.5% last week. This is up from the 3.2% that they had forecast back in December. Australian stocks have also had a decent start to the year, with the ASX 200 index up by more than 2.7%. Big mining companies have been the major beneficiaries of higher bulk commodity prices, and the banks have seen gains as a result of higher bond yields. And that's finance.
Thanks, Ben. It's a good time to fill up before prices rise.